All right, everyone. It is Friday. We got so much information out here that we just gotta just jump into it. Let's just jump into it for the sun.
How about we jump around like Cypress Hill?
Wow.
I don't know if was that the right band for that song? I don't even know.
Jump around, jump around.
Was that it?
I don't know. That's a different band, I think. I don't know if you're watching this right now and you know who that band is. Please comment below. All right. So this was the question. This was the question for last week. How much of the most expensive attached properties sell in San Diego so far this year? And the answer for that was
how much?
3 million. Most expensive attached property I sold this year. So $2.3 million already this year. So it'll be interesting to see what we get up to. Now let's go the opposite direction.
Do you want to go into some other stuff that happened this week that's kind of important for people?
What stuff are you talking about?
Well, so some of you may be wondering, like, me and Vinnie, we've been talking about different things going on, and you're like, well, what does the Fed mean? What does this mean? What are all these decisions? Well, for those of you who are wondering about Jerome Powell, I know everyone's been wondering about him because he's very popular. He was reappointed as the Fed chair. And Jerome Powell came out and said, unfortunately, they're working with some data that could lead them to a recession. And he did mention that, which is funny because, Vinny, me and you have been talking about this for how long now?
Maybe for a while.
And he mentioned that we may be headed towards a recession. But with his power, he's going to do all he can with stimulus and everything to help the U.S. economy avoid going into a recession in the near term. Now, near term is a relatively speaking of usually a year, which is what me and Vinny have been saying. So, I hope he succeeds. We don't want a recession. We don't want that. But some other things came out this week too that were not helpful. Once again, if you've been watching our show, you realized we keep talking about this thing called inflation, and all the numbers came out this week again. Producer price index, prices rose again. That's not good. That's all about inflation, and we don't want inflation to keep going and going and going because it does have a bad outcome. And then also this week, the consumer price index and producer price index, both of them, I know I just kind of mixed with the words, but both of them are basically two different indexes that measure your price of goods, and both of them went up again. How much are you saying? Well, 0.5% on each, but that does push your inflation, not including food and energy, at 6.8 to 7% now. So if you're following me and Vinny for the last couple months, we went from 3 to 4 to 5 to 6 to 7. And if you factor in food, for those of you who eat food, now not everyone eats food. And for those of you who use gas and energy, which is everyone unless you have a Tesla, I unfortunately am too broke to have a Tesla. But one day maybe I'll be able to have one because I think it's a great car.
Well, we have a question right here from Emmanuel, our guy Emmanuel. Do we want a little bit of deflation to bring prices back? Or
do we want stagflation? No, we don't want stagflation, Emmanuel. I know you didn't ask that, but I'm throwing it out there. You don't want stagflation either. And you also don't want inflation to keep going, devaluing the value of a dollar. But what's the good side of the dollar being devalued through inflation? People can buy. Wow, Vinny, you didn't even help me out. Houses are a hedge.
You were on a tangent, man. You're going for it. I think that was a 2.5 minute just kind of and a 2 minute conversation. I think he had his whole speech. He was ready. He was ready for politics, ready to go.
I'm not endorsing either party, although I will say this: I think both parties suck. So just to be fair, both suck.
Wow. Now we're getting to politics. Okay, let's talk about Let's talk about rates. All right, so if you look below, we have the rates right there. We got jumbos, mind you. These change so often, so frequently that if you want up to date numbers, please reach out to myself or David, and we can help you out with that. You'd probably better serve reaching out to David. So here's the information below, all in the threes across the board. If you would have reached out to us maybe a couple weeks ago, you would have saw something possibly in the twos. David, oh, here you go. David for president or chairman of the Fed.
That is a no. That is absolutely not happening because A, I'm not corrupt enough to run for either offices, and that's nothing against anybody, but I take the moral high road, and I think we need to bring back this weird thing. These two words, I'd love to bring this back. It's called common sense.
Well, I mean, that's going to be hard to do.
Yes, so that's why
if we get into politics, this could go really bad. Let's go into some more numbers, right? You already saw if you're watching the ticker down low, you've seen what active properties, pending properties. That hasn't really changed that much since the last time we've had updates. But I wanted to go into. Oh, we still got David for president. All right.
No, we're definitely not doing that because if you ever watch what happens to the people that become president, they start out looking mediocre. Let's put it to be nice. But then a couple of years in, they look absolutely terrible because the stress level is ungodly. And unfortunately, a lot of them are making deals with the devil, and I'm not willing to do that.
So if you can see right here, I mean, the big thing you really want to look at is the difference between the median sales price or year over year on the left column right there. Again, La Mesa, Mountain Helix area has gone up by 10%. La Jolla from last December to this December gone up by close to 30%. And Lakeside gone up by 20%. I mean, the reason why you'll see the numbers trickling down a tad bit is simply for the fact that we would have probably had to go back a year and a half to see those 30-some jump up. But people are buying a lot more, I think, off of price than location. So right, I think I looked earlier today. There's very, very low inventory under that 600 threshold. So as interest rates are going up, it's going to be probably harder and harder for people to try to find affordable houses. You're going to probably need two incomes to really purchase. So if you're asking, are we going to see a slowdown to the market? Well, with rates trickling up, and David's already brought it up, they're going bonkers. Yet if they trickle up, as they trickle up to the high threes, possibly to the fours, you're talking about a jump of 10%. Like, for example, right, a 1% jump in interest rates could equate from a monthly payment that you'd be paying on a $600,000 home to a $660,000 home, roughly, right? So that same monthly payment, that buying power goes down from 660 to 600. All right, so just factor that in when you're thinking about, okay, well, how are we going to do with interest rates? What are interest rates going to do? That could play a huge factor in people's buying power and what they can afford. And I'm throwing it out there. And if you're watching this in a year from now, 2 years from now, I really think people are going to start looking at adjustables as basically interest rates are going up just to qualify and be able to afford to purchase these properties. So something to really think about. So if you're looking to take advantage of the market in the buying or selling of a property, you might want to look sooner than later because we might slowly start lose that demand. Any last words you want to throw out there, David?
You know what? I just want to. You mentioned a lot of interesting things, and so nobody asked this question, but they said, "Who's buying right now?" A lot of institutional investors are buying. A lot of hedge funds are buying. A lot of people are buying up properties because it's a great hedge against inflation, and rents continue to go up. And if you have a good CPA, you can depreciate that asset as well. So now you start doing what's called triple double. I'm just kidding. It's not called that. But it's triple positive things. You have increasing rents. You have a hedge against inflation. and you also have something you can depreciate as well and transfer the wealth. So you are seeing some more smart money move into hard assets. If inflation continues to go up, I'm predicting it continues to go up. And I have one more other prediction, but